Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined today by Ed Carson. On today's show, we'll talk about some hawkish testimony from Federal Reserve Chairman Jerome Powell in front of the Senate today. That fueled a lot of selling on Wall Street. But before we do that, Ed, as usual, has got three stocks to watch. What do you got, Ed?
Well, a couple of stocks held up pretty well, Delta Airlines and Canadian Solar, while Freeport McMoRan did not.
Okay, probably had something to do with that strong dollar today with the selling in Freeport McMoRan. We'll talk about that in a bit. Let's start off by taking a look at the S&P 500, which ended with a loss of 1.5%. Looks like volume is going to be pretty close to what we saw yesterday, maybe even a little bit lighter, but still, Ed, we had S&P threatening a break of the 50-day moving average after a pretty bullish day on Friday.
Yeah, pretty bullish day on Friday, and then we started off Monday solidly, but ever since then, things have gotten pretty troublesome. Reversed off highs yesterday, and it was worse than it looked because a lot of that was Apple and Microsoft propping things up. Then coming through the 21-day line and through the 50-day line, definitely discouraging. And we're really not that far from undercutting the 200-day line again, and that would be real trouble.
All right, well, let's move on and take a look at the Nasdaq. Not down as much as the S&P 500. Nasdaq down about 1.25% at the close. Technically looking a little better than the S&P 500, but down for the second straight session and a close near lows.
Yeah, and just as it could be negative, like it wouldn't take much to get below the 200-day and 50-day line, we have to keep on the other side. It wouldn't be that crazy for it to, if the major indexes get above Monday's highs, all of a sudden things would look pretty strong as well. So it's just a difficult time, and I think investors should probably be fairly cautious in the short run.
Fairly cautious. And so let's talk about Jerome Powell and what he said on Capitol Hill today. It was definitely hawkish testimony in light of elevated readings on inflation that we've seen. We've got the 2-year note over 5% at this point, and here's a chart of the 10-year note bumping up against that 4% level. So, Ed, in a rising interest rate environment, typically not good for the stock market.
Yeah, and as you know, the 2-year yield went over 5% really sharply. So the short end, which is more closely tied to the Fed, that really moved today. And the 10-year yield, not so much. But yeah, the 2-year, the 6-month now is at like 5.29%. So that's going to be a pretty attractive yield relative. I mean, risk-free. Yeah, it's inflation and all that, but still, that's a pretty decent return. And also, I think we'd say that the dollar really reacted to the generally higher yields, and this is also something that's not a good sign for the U.S. market.
Yeah, really going to be interesting to see what UUP does at the 200-day moving average. Not sure it closed above the line, but typically that could be a resistance level. But if that UUP were to break sharply above that 200-day line again, probably not good for the stock market. So we'll be watching that. All right, let's take a look at the Dow Jones quickly, which ended with a loss of 1.7%, so a little worse than the Nasdaq and the S&P 500. Pretty big down bar here, maybe poised to visit that 200-day line again.
Yeah, so it's been the laggard, didn't really, it's just trying to get its feet, and now it's tumbling back again.
All right, and then finally, small caps, looking at the iShares Russell 2000 ETF, that was down. Actually, it lagged badly yesterday, down 1.1% today, clinging to its 50-day moving average here.
I think this is the lowest close since late January. So small caps, which were doing so well for quite a while, yeah, they've lost that position there.
So is it fair to say, Ed, that the market was surprised at what Powell said today, or maybe it was really the first time he publicly acknowledged that that terminal rate at 5.1% likely is going to be a little bit higher than that? But was there anything new or surprising that you heard from Powell today?
He was very explicit about going faster. I don't think anybody's surprised that the rates were going to go higher. I mean, markets were pricing in 5.5 or better, so definitely higher than what the Fed had last projected several months ago. But he said that rates may have to go faster again. I mean, some Fed officials said that, but it was really meaningful for Powell. The odds of a 50 basis point hike on March 22nd went from 31% to 70% today. So,
wow.
That's really. You have the jobs report on Friday, and then there's the CPI report next week. That may lock in 50 basis points or bring 25 back into play. But yeah, that changed things, for the market.
Well, the next, like you said, the next economic report, the jobs report on Friday. Of course, the payroll growth in January was way, way above expectations, more than 500,000. The unemployment rate unexpectedly dropped. So we're going to be getting February jobs data on Friday, and I don't think the market's going to want to, see another strong, better than expected jobs report. Do you agree with that, Ed?
I think that's pretty safe to say.
Okay. All right. Well, let's take a look at some individual stocks today. We'll start with Delta, that had some positive analyst commentary. You think the airlines are getting ready to move here, Ed? It seems like there's been, some false starts. Are they ready to resume or do some market leadership here?
Well, let me put it this way. I would say yes, which therefore means no, because every time I thought that the travel stocks are ready to go, they cancel my plans. There are a number of stocks, Delta among them. I mean, Delta, you could argue, is still fairly close to its 50-day line, sort of moving up, breaking the trend line the past couple of days of this handle, showing some strength in that regard. The RS line isn't far, basically matching, the highest levels since last May or June. So there's definitely reasons to be, positive on this, but yeah, it is really tough to say, and it's not necessarily. This one is, arguably actionable, but it's not a great time in the market to be buying stock.
Right. Well, this actually does look like a pretty good technical setup, because when it initially broke out and ran up towards the 40 level, there was quite a bit of volume, lots of accumulation going on in the stock. And then once it hit 40, it started to drift lower here in light volume. So it's in a nice little consolidation. We'll see if Delta can follow through tomorrow, even though market conditions certainly are challenging. All right, let's move on to solar stock here. Canadian Solar, CSIQ. And this is another stock prone to some volatile swings, but threatening with an entry here and a possible upside breakout.
There's a number of solar stocks that are looking pretty strong. First Solar, of course. There's a new IPO, an X-Tracker that's been pretty volatile. This is another name. There's a number of names, which is positive in itself. So even if you say, I don't want to buy Canadian Solar, it's still good to see this going well. So it flashed an early entry yesterday, sort of getting above this area here. It's held that, really didn't move much today. There were a number of leading stocks that held up pretty well. I don't know if that can continue, but it was nice to see this holding up in this regard. It does have pretty strong fundamentals this year and pretty strong growth seen next year as well.
Yeah, well, it's one thing about the solar stocks. A lot of them check boxes from a fundamental perspective. You can see the big annual earnings estimates for Canadian Solar. Lots of other stocks in the group showing really good growth here. So that's a look at Canadian Solar. And let's start by, we talked about that strong U.S. dollar fueled a lot of selling in the mining and metal stocks today. FCX is the ticker here, Freeport McMoRan.
Yeah, and if this wasn't the biggest loser in the S&P 500, it was very close. It was definitely up there in terms of that. Yeah, it was the second worst performer. It was flashing buy signals last week as it was sort of crossing over here. Well, what was going on? Well, copper prices were moving higher because we were in, enthusiasm about China and whatnot. Well, there's been some weaker signs from China recently, and the stronger dollar really played on copper prices and commodity price, as well. So really sharp drop. If you took a position in this area, have to be cutting that now because it's just really big losses, and it's just tricky. That's that commodity prices can quickly swing. This was really, it's unfortunate when that happens, but that's what's happened here.
Yeah, no doubt about it. Big price drop for Freeport today, and yeah, that strong dollar and rising interest rates, is problematic for the stock market. But we'll have to just kind of monitor the action day by day, and in terms of what individual investors should be doing now in light of today's selling, we've been talking about exposure between 60 and 80%. I guess investors just should be looking at the individual stocks that they own and, making sure not to let small losses get out of control, and don't be afraid to take some profits if you have them, right, Ed?
Yeah, and even if you're not explicit, I'm going to reduce my exposure from X to X, chances are just individual stock pruning. I mean, it's like, I'm not going to be buying stocks in the very short term, and then I'm going to prune these individual names because that's what they're telling me. You'll probably reduce your exposure somewhat anyway.
Okay. Well, still seeing some decent action in individual stocks out there. I know the leaderboard model portfolio outperformed quite nicely today. Good mix of stocks there. So not ready to get too bearish on this market yet, but today's action certainly not good to see. It looks like Nasdaq volume was quite a bit higher than what we saw on Monday. So likely a distribution day for the Nasdaq. All right. Well, thanks very much for your insight as usual, Ed. Ed and Justin will be back tomorrow, but that'll do it for today's show. A reminder that you can get free access to IBD Digital all week through Sunday. All you have to do is go to theinvestors.com homepage. There's a banner right at the top of the page that says get free access to IBD Digital. So be sure to check that out. And then tomorrow morning, we'll be back on IBD Live starting at 9:20 a.m. Eastern time, going for a little over an hour talking about the market and individual stocks. So be sure to join us. You can go to investors.com/IBD Live. Again, that'll do it for today. Thanks for watching, and we'll see you back here tomorrow.